The Motley Fool just hyped up another AI stock, but as usual, they won't tell you the name unless you buy their newsletter. But don't worry, I have good news. I figured out which stock they were talking about, and I'll reveal it to you for free in this video. On top of that, I'll also share some background information about this secret company and some pros and cons of investing in it. Make sure you watch all the way to the end so you don't miss any important information. Let's jump right into the email they sent their subscribers to see what they're talking about. The email starts off by claiming that AI is going through the same thing smartphones went through when Apple launched the iPhone. Essentially, the winners and losers of AI will be decided now, and the losers will fall to the side like BlackBerry and Nokia, and the winners will explode like Apple. The Motley Fool says everyone already knows about the big players in AI, such as Microsoft, Amazon, and Apple. While they still recommend these companies, they claim you will not be getting the massive returns you would have gotten if you invested in Apple when they first launched their iPhone. To get those returns, the Motley Fool claims you need to invest in the company they're pitching in this email. Apparently, this company is 8 times smaller than Apple. Almost no one has heard of them, and many people are saying this company is the backbone of AI, which couldn't exist without this company's products. I'm about to tell you the name of this company in 10 seconds, but first, I have a free gift to help you in the stock market. Click the link in the description, and I'll send you an issue of the only stock-picking newsletter that I use and recommend. I'm literally giving it away for free, so just click the link in the description and I'll send it right away. The stock that's being hyped up by the Motley Fool as the backbone of AI is ASML. ASML is a Dutch multinational corporation and one of the world's leading suppliers of photolithography equipment for the semiconductor industry. Headquartered in the Netherlands, ASML was founded in 1984 and has grown to become a key player in the production of advanced chip-making machinery. The company's technology is crucial for the manufacture of integrated circuits and is used by major semiconductor manufacturers such as Intel, Samsung, and TSMC. ASML's most notable product line is its extreme ultraviolet lithography machines, which are essential for producing the latest generations of microchips. So overall, ASML technology is necessary for the advancement of computing, communication, and all the other industries that rely on cutting-edge microelectronics. But just because a company is working on some cool stuff doesn't automatically make it a good investment. So we need to carefully analyze the pros and cons of ASML from the point of view of an investor. Because I'm such a positive guy, let's start with the pros. Here are the top reasons to invest in ASML. For starters, ASML holds a unique and unparalleled position in the semiconductor industry as the only company in the world that manufactures extreme ultraviolet lithography machines. These sophisticated machines are crucial for producing the most advanced semiconductor chips, making ASML a key player in the industry. EUV lithography machines are highly complex and insanely expensive. Each machine costs a mind-boggling $150 million. Despite the high price, demand for these machines is exceptionally strong due to their essential role in creating smaller, faster, and more power-efficient chips. The high demand for ASML's technology shows how important it is for advancing semiconductor capabilities. As the semiconductor industry grows, especially with artificial intelligence becoming more common, the need for advanced chips is expected to explode. This puts ASML and their investors in a great position to rake in the profits. AI applications need very specialized and powerful chips, and ASML's EUV machines are key to making these advanced semiconductors, offering significant returns for investors. Financially, ASML has had a strong performance, with the latest quarterly revenue reaching 6.9 billion euros, which is significant growth. The company is committed to returning value to shareholders through dividends and share buybacks, recently announcing a new share buyback program of up to 9 billion euros by the end of 2025. ASML also maintains a high gross margin of around 51%, which is a sign of its strong market position and pricing power. In the latest quarter, ASML shipped 13 EUV systems and has a substantial backlog of orders, indicating continued strong demand and revenue visibility. Also, ASML's client base includes industry giants such as Intel, TSMC, and Samsung. These relationships are long-term and deeply integrated, making it difficult for clients to switch suppliers, thus ensuring a stable and recurring revenue stream for ASML. As AI, 5G, and the Internet of Things drive the global demand for advanced semiconductors, ASML's key role in the supply chain will likely translate into sustained financial growth and lucrative returns for its investors. Also, continuous investment in research and development is another key advantage for the company. ASML is committed to maintaining its technological leadership, which is highlighted by the development of high-NA EUV machines, which aim to produce even more advanced chips. This focus on innovation ensures that ASML stays ahead of the competition and meets the evolving needs of the semiconductor industry. But it's not all sunshine and rainbows. Here are some reasons why you might not want to invest in ASML and look elsewhere. First of all, the semiconductor industry is highly cyclical, and demand for chip-making equipment can fluctuate significantly based on global economic conditions and technological advancements. While ASML's technology is currently in high demand, any downturn in the semiconductor market could impact the company's revenue and profitability. Also, ASML operates in a highly competitive and technologically advanced industry, requiring continuous innovation and significant R&D investment to maintain its market leadership. The company faces competition from other semiconductor equipment manufacturers, which could pressure margins and market share. Regulatory risks also pose a challenge, as ASML's operations and sales are subject to export controls and geopolitical tensions, particularly regarding its dealings in China. We can't ignore the fact that any changes in trade policies or regulatory frameworks could affect ASML's market access and operational efficiency, which could have a direct impact on stock prices. Overall, you must consider the pros and cons of ASML before you can make an informed investment decision. And if you need some help with your stock research, I have good news. I recently started using an amazing stock picking service called the Insider Newsletter, and I'm in love. The team behind the Insider Newsletter doesn't focus on marketing, which is why you've likely never heard of them. And that's a good thing. The Insider Newsletter is my favorite stock picking service because instead of pumping out exaggerated stock teasers and advertisements, the team dedicates almost all their energy to good old-fashioned stock market research. So it's no surprise that the Insider Newsletter has been absolutely crushing the market since starting its service a few years ago. I love how the researchers behind the Insider Newsletter only share valuable stocks that most investors have never even heard of. This gives their subscribers an advantage since they can jump on these investment opportunities for a very low price before everyone else. For example, they recommended buying shares of Lynas Rare Earth Limited in June 2017 when it was selling for about $1 Australian. As of July 2024, the stock is worth over $6.11. This means investors who took their advice back in 2017 earned over 517% in profit. More recently, in March 2022, they recommended an oil services company called Tidewater, which has grown from about $20 to over $87 as of July 2024. So if you took their advice, you would have made over 300% profit in just 2 years. I want you to experience their newsletter for yourself, so I have something special for you. Click the link in the description and I'll send you one of their past newsletters with 5 stock picks for free. I'm literally giving it away for free, so click the link in the description and check it out.